Welcome back, traders and creators. In today's video, we're going to talk about the most important thing that you need to worry about as a day trader in order to be profitable. So if you haven't yet, make sure you subscribe to the YouTube channel and follow the Instagram so that way you can stay up to date with daily videos and content. So let's get right back to that video. What do I mean when I'm talking about what's that one thing that you need to worry about in order to be a profitable trader in the Forex markets? So I'm going to click on my all-seeing eye, and basically I'm going to show you a very quick but very effective example of what I mean. And I'm going to describe this picture to you, and then by the end of the video, you're going to realize what the most important thing is when it comes to being a profitable trader. So right here, we have obviously a short position, right? You have your blue or your profits below and your risk in the red above. So to talk this out, I was thinking that maybe, as a retail trader, as a indicator trader, smart money trader, whatever kind of a trader you are, let's just say we somehow, or for whatever reason, decided to sell the markets in this area. Now, let's say that was because we saw the market trending up, and as it was trending up, we saw that it created a floor right here. And we saw that floor, and after the market rose up, it broke through that floor, therefore creating support and resistance. Let's just make this simple. The market breaks through and it retests that area. Now, as a retail trader, I'm going to find that as a very good move that I want to take. So what we're going to do is when we see this long wick or these bearish engulfings or whatever you want to indicate in order for you to get into a sell, we're going to set our risk above the last high, which is right around here, 80 pips. Not the best, but our take profit is down here at this last wick because that's the lowest that the market went to. That, on the other hand, is around 150 pips. That is definitely something I'm looking forward to. So let's say our risk is 84 and our profits are 150. We could see that our risk to reward, and also think about this short and long position tool, which is right here, these two, is that it basically tells you your risk, your reward, and basically the risk to reward ratio. Now we can see that our risk to reward ratio is 1.78. So basically, every time that we take a trade, say we take two trades, this isn't a bad example, but regardless of that example, let's just say that we are almost at a 2-to-1. So every two trades that we lose, every one trade that we win will make up for those two losses, if that makes sense. So basically, the most important thing that I think all traders can understand is making sure that it doesn't matter how many pips you're catching, whether it's 20 or 150. What really matters is how low you can get this to be. How low can you get your stop loss to be? Because look at the change here. So when I come into here, let's say that our account size is $1,000 and we're risking 5% on this trade, which is a little too high, but it's a lot better than what some of the other retail traders are doing. So our $1,000 account, we're risking 5%, which is $50, but we are looking to make $88, almost $89 on this trade. So think about that. We're risking $50 in order to possibly make 88. For some people, that's great, right? You're making more than you're losing if you win this trade. But let's say you had a better way of trading, a better method of trading. You knew how to really snipe the markets. You really understood how the markets were working, and you were able to get this stop loss. Now I want you to really pay attention to this number and this number as I lower the stop loss and also the risk to reward ratio. As I lower the stop loss, you can see that this number does not change because we're always risking 5%, but as the risk to reward ratio gets greater, so do our profits. So no matter what, we are always risking that percentage, which is in this case 5% or $50. But look at the profit just as we lower our risk to reward. Now let's say instead of coming up to this high, our stop loss is above this high. Instead of 84 pips, it's now 27. And our risk to reward ratio is now almost 5.5 to 1. And now look at the difference. Instead of risking $50 for 80 bucks, you're now risking $50 for almost over $275. I don't know about you guys, but that definitely seems more appealing to me. So I hope this example really helped you understand that the number one thing that you should be looking for in all your trades is making sure that you can get this risk to reward ratio as high as possible in your trades, whether that means tightening those stop losses or extending those take profits. But your main goal as a trader to be profitable, make sure this number is as high as possible for every trade. I hope you guys liked it. Make sure to subscribe, leave that love, leave some comments, and I'll see you in the next video.